Our group did Sweden for the COVID Across the Globe presentation, and this is by Nicholas, Laura, Hayden, and Addison.
As of May 28th, there were 3,474.31 cases per million people in Sweden. In Sweden's neighboring country, Norway, they reported 1,546.33 cases per million people also on May 28th. And as you can see in the graph, starting kind of in mid-March, their cases in Sweden started to rise rapidly. And also you can see that in Norway, Sweden's neighboring country, that they had a lot fewer cases than in Sweden. And then on May 28th, Sweden reported 417.85 deaths per million people. And this is since the virus began. And then on the same day in Norway, there were 43.35 deaths per million people. And then in the graph, you can see that kind of in late March, early April, this is when death rates in Sweden started rising rapidly. And then the public health measures that Sweden took were very different than other countries. They actually decided to ignore the WHO's recommended policy, and they decided not to place a lockdown. And so they actually extended onto their Communicable Disease Act. And in doing this, they temporarily closed shopping centers, they suspended transportation, and then they enabled kind of the redistribution of different medicines and medical treatments and equipment. And so they also decided to close down, well, not close down, but they decided to not let large crowds into restaurants, bars, and cafes, but they decided to keep these things open. And they just said that customers had to remain seated in all these places, and there was no bar seating, but they decided, not to lock down and to keep restaurants open. And then they also placed a temporary ban on visiting nursing facilities, and they decided to add extra training and education for employees in these facilities. And they also increased national testing, and then they decided to have no crowds of more than 50 people gathering to kind of place social distancing rules. And then they also decided to put a restriction on dispensing medicine, and that pharmacists cannot dispense more medications than a patient needs for 3 months. And then all these public health measures that they put in place were working to flatten the curve. So as you can see in this graph, they wanted to increase social distancing and different healthcare measures in order to flatten the curve, but they also did not want to put their country on a lockdown because they wanted to pay more attention to the mental and emotional health of their population. And in not placing a lockdown, they thought that this would help the mental and emotional health of the population. And also in not doing a lockdown, they thought that this would increase herd immunity and that this would help them better prepare for the next wave of the virus. And then they also increased testing in hopes that this would have a positive impact on the society and on the economy, and that this would expand, the national numbers of people that would be able to come back into work.
So one economic journal posed the question of if a lockdown is it effective means to limit the spread of COVID? So according to this economic journal, they essentially studied Sweden by using a synthetic control technique to develop a counterfactual lockdown scenario. In doing this, they studied the Google mobility data and found that Swedes actually adjusted their activities in absence of a lockdown. So in terms of this, it suggested that voluntary social restraint played an important role in the results of the study, as that's what most Swedes ended up doing, despite the absence of a lockdown. This also posed the question of whether voluntary social restraint implies significantly lower economic costs than a full-blown lockdown. However, this question will be left for future research as we are currently in the midst of this pandemic. And this is one of many present studies that can advance our understanding of whether or how lockdowns work, and Sweden is the perfect example for this. So in terms of economic effects, early figures showed hope for Sweden's absence of lockdown. Initially, Sweden's GDP for the first quarter of 2020, it recorded a decline of just 0.3% in comparison to the 3.8% decline for the Eurozone. However, Economists are now arguing that Sweden is unlikely to escape the economic pain like the rest of Europe, and the European Commission forecasts that Sweden's GDP will fall by 6.1% this year. Here, the Riksbank, which is Sweden's central bank, has forecasted two potential scenarios, and I'll go into detail about these in the next few slides. So in terms of GDP, as I mentioned before, during the first quarter, it didn't look like it was going to be affected a ton, but however, approximately half of Sweden's GDP comes from exports, and major companies such as Volvo and Electrolux have cut thousands of jobs as demand continues to dry up. The Riksbank forecasted a decrease by 7 to 10% for the 2020 forecast of GDP. So the demand downturn affected both large and small businesses in Sweden. The last demand downturn of a similar scale was during the 2008 global financial crisis. In terms of Volvo, their order intake fell 16% in the first quarter, but Volvo actually warned the decline had been 75% in March versus February and has been net negative since. We've also seen a demand downturn in small businesses such as a Swedish record shop who saw business drop approximately 30%, and a survey showed 40% of businesses now fear bankruptcy. In terms of inflation, the 2020 forecasts low inflation due to sharply falling oil prices and electricity prices. And finally, the labor market, a record of 36,800 people were handed layoff notices in March, which was 10 times the number of March 2019. Unemployment rate, the forecast expects a decrease in 2020 by 9 to 10%, according again to Sweden's central bank, and that comparisons to last year's jobless figure of 6.8%. And finally, Sweden's debt office actually revealed a historic 30-fold spike in borrowing to cover emergency spending and record job losses.
Okay, so to get into a bit of the fiscal policy that Sweden has taken, so to review, fiscal policy is government spending on taxes, transfer payments, or actual spending. And so Sweden put forth a $30 billion stimulus package announced in the middle of March. And that in context, that's pretty high. It's 12% of their GDP, which only trails Japan and the US for percent of GDP. It's interesting that Sweden's in a strong economic position to bear the financial cost of stimulus, and they have the lowest government debt level in over 50 years. And so it's also interesting that unlike us, they're part of the EU, which is obviously a consortium of countries. So the EU in the last 2 days have put forth a $2 trillion stimulus bill. And essentially what they're trying to do is they're trying to take money from richer countries to help both poor countries and those with really high national debt, like Spain, Italy, and Greece. Spain and Italy have been hit really hard by COVID, but they've only spent around 6% combined on a per GDP basis. So there's a group of countries called the Frugal Four, which is Sweden, Netherlands, Denmark, and Austria, and they've opposed this plan because basically they're saying, we're in strong economic position, why should we pay for Italy's mistakes? Okay, so one of the biggest things in terms of impact on the fiscal policy front has been taxes. And this has come in two buckets, mainly deferment and reduction. So in terms of deferment, the Swedish government has allowed for a 3 to 12 month postponement on value-added tax, preliminary taxes on salaries, and employer contributions. But it's interesting to note this doesn't come without fees. The fees are 1.25% annual non-tax deductible interest payment, as well as a 0.3% monthly postponement fee. And when you add those together, it's equivalent to around a 6.6% annual interest fee. So it'll be interesting to see if companies use that option or seek external funding. And this is the biggest cost of the government to the plan out of the 30 billion. And then in terms of reduction, they've reduced the Social Security contribution from over 30% to around 10%. And if you're an employer and you want to take this option, it's only 30 employees per firm, up to $2,500 a month, basically. Entrepreneurs, their taxes are reduced to 2/3 of their regular taxes. They still have to pay for the pension, and coronavirus affected firms can apply for a reduced tax installment, so basically a lower tax rate. And then so for transfer payments, there's sort of three main buckets they get into. The first one is short-time work allowance. And so basically what this is they're reducing employees' hours, yet still giving them a lot of their pay. So though most employees will receive 90% of regular pay, which is a lot more than they've had here, and the government will pay 75% of that cost. This is up to $4,500 US dollars a month for employee, and the company must be in coronavirus affected financial trouble. And the company that takes this option can't pay financial dividends. In terms of sick pay, Swedish government assumes the responsibility of sick pay from the employers for 2 months. They'll pay a sickness benefit first day of the sickness, and they did away with a regulation that requires a doctor's certificate, and self-employed individuals receive 2 weeks of sick pay. And then rent relief for exposed industries, people in industries like retail. If you own a restaurant, the government will pay up to 50% on a rent rebate of your rent. And so that'll go up to 25% of your original rent. And so 2 interesting facts here compared to the US are the stipulation that you can't pay dividends, because when the Small Business Act went out, whatever that's officially called, there was a lot of controversy over public companies like Ruth's Chris taking the money, and other companies that have laid off people and then paid dividends. And then also for self-employed individuals here, we've had a bit of a conflict over that. So the focus has been more on taxes and transfers to eliminate the short-term economic burden in Sweden. And most of the spending that they have done is related to actual virus stuff like PPE and testing. There's also been a little bit of spending on vocational training programs, so they know that hopefully that most people are going to keep their jobs, but there's going to be a population of unemployed people after this virus is over. And so they've spent 225 million US dollars recently, which hopefully will train 10,000 workers to care for the elderly.
Some of the monetary policies that Sweden has enacted is they've reduced their lending rate for overnight loans, reducing it 55 basis points to a percentage of 0.2. They've also planned to lend up to 500 billion to companies, to small business companies. They also introduced a new lending facility where banks can borrow an unlimited amount of money with a 3-month maturity. And they've increased the purchase of securities of up to $300 billion for this year. They've also established a swap facility of 60 billion US dollars between their national bank, the Risk Bank, and the US Federal Reserve. They introduced for banks a possibility to borrow from United States dollars against a collateral of 60 billion US dollars. And they've eased the rules for the uses of covered bonds as collaterals as well. And they've allowed all accredited institutions under the Swedish FSA the ability to access new lending facilities temporarily during the virus. Looking at one specific policy, the state loan credit guarantee policy or program. The program providing 100 billion for state loans to those businesses negatively affected by COVID-19. The primary target are small and mid-sized enterprises and aim to facilitate access to financing for companies affected. There are 3 conditions to get into the program. There's only a 3-month time frame that you can apply. There's a 3-year maturity rate, and the maximum loan is 75 million. And you cannot pay dividends or buybacks of shares during this program.
And here's our works cited. Thank you for listening.